that is the Consolidated Fund of India and the Consolidated Fund of States. As far as the taxes which are there, which are levied by the Union, all of these taxes do not come to the Consolidated Fund of India, and here we discuss the distribution, division, assignment, apportionment. There are various headings in which this tax which gets collected under the head of the Union, but it need not flow to the Union. It may flow to the Union and States, it may flow to the states, and there are broadly four methods of doing it. So though all the state taxes is going to the Consolidated Fund of State, all the union tax is not necessarily coming to the Consolidated Fund of India. There are various, I'll just rub this, there are various mechanisms for doing it. So one is levied, collected, and appropriated, assigned. These are the words you will find in the Constitution: assigned, then apportioned, and divided. When we talk about the apportion and divided, here it talks about apportionment between union and states, division between union and states. In case of appropriation and assigned, appropriation means it is appropriated by the states, assigned means it is collected by the, let me just go one by one. So 268 deals with stamps duty, which is in the union list. So it is levied by union, but it is collected and appropriated by states. So states collect it and states appropriate it. So it doesn't come to the Consolidated Fund of India. States collect it in their respective jurisdiction, states appropriate it. Why union levies it? It is more for the sake of uniformity, and the collection is left to the states. Appropriation is also done by the states. Only the amount which pertains to union territory, that comes to the Consolidated Fund of India. So amount falling under Article 268, which is the stamp duty, which pertains to union territory, goes to the Consolidated Fund of India, and under 268, which pertains to state, goes to the Consolidated Fund of State, though it is levied by union. Now there is another category, which is Article 269. It is levied by union, and 269 covers the tax on the sale and purchase of goods. It is not supply, it is sale, and there is a subtle difference between sale and supply. We are not going into those nitty-gritties of taxation. We are just discussing the broad features of the distribution. So it deals with the tax on the sale and purchase of goods, tax on the sale and purchase of goods, on consignment of goods, when it happens in case of interstate trade and commerce. So when sale and purchase is in between, it happens when the trade is there between two states, interstate trade and commerce, or consignment of good is going from one state to another, this tax is levied by the union. It is in the union list. It is collected by union. So it is levied by union, collected by union, but here it was appropriated. Appropriated word because the states were themselves collecting, so they were appropriating it. Here the word is assigned because the union was collecting and it is assigning to the states where it is collected, and also it is distributed in between the states. And in what manner the distribution will take place is decided based on the law made by the parliament. This also doesn't come to the Consolidated Fund of India. Only the part if it pertains to Union territory, it comes to Consolidated Fund of India. And 269, it divides between the states, and the assignment is done by Union because Union has collected it. Now there is another tax, 269A, which you are familiar with, which is goods and services tax. The list of taxation which is there in the areas of taxation which are there in the union list and in the state list, you will not find mention of goods and services tax. Goods and services tax has been separately mentioned in Article 246A. After an amendment of 101st Amendment, this new article got inserted, and it is goods and services tax. This goods and services tax can be levied by both union government and by the state government. And this is goods and services tax is on the supply, not the sale and purchase. It is on supply of goods, supply of services, or both. And it can be levied by state government, it can be levied by union government, but in case it is in the course of interstate trade and commerce, it is only by the union government, the goods and services tax. So 269 deals with that part of goods and services tax which deals with interstate trade and commerce. So supply of goods and services. This tax will be levied by union. Union will levy it. It is in case of interstate trade. Union levies it. The union collects it. Like here, levied by union, collected by union, levied by union, collected by union. But here the word is neither appropriated nor assigned. The word here is apportioned. So it is apportioned between union and states, and based on the principles decided by the Parliament, and Parliament will take into consideration the recommendation of the GST Council, which is there under 279A, headed by the Finance Minister. And the important point about the Goods and Services Tax Council is that the decisions are taken there by the 3/4 majority. You need 3/4 majority, and 1/3 of the votes are with union, 2/3 of the votes are with states. These are weighted votes. 1/3 is given to the union, 2/3 given to the states, and the decision has to be taken by the 3/4 majority. In the constitution, you will find 3/4 majority only in this case, and there is in the scheduled areas or scheduled tribe in the fifth or sixth schedule, this 3/4 majority is mentioned. Otherwise, you have the mention of only 2/3 majority. Now, these are the specific taxes which, though levied by union, but are assigned, appropriated, and apportioned between union and states based on the principles determined by the parliament. The other union taxes which do not get covered in 268, 269, and 269A get covered in Article 270. So let me remove it. So Article 270 deals with the other taxes, and there comes the role of Finance Commission. Here it was on the basis of principles laid down by the Parliament, these articles which I covered, but 270 deals with other taxes, means excluding 268, 269, and 269A. Also excluding cess and surcharge. Surcharge, it is levied under Article 271. So any cess, any surcharge, and these taxes which are covered in this article, Excluding these, the other taxes, the other taxes which are generated by union are shared. What is shared? The net proceeds only. This is important because the tax returns minus the administrative expenses is your net proceeds. So net proceeds will be shared, will be divided between union, states as a whole, and states according to their weights, which Finance Commission has arrives at different formulas at different point of time. You can have a look at the formula adopted by 14th Finance Commission for reference. Point you should remember is surcharge is never shared. It is clearly mentioned in Article 271, and surcharge is tax above the tax. Cess is also like surcharge. The difference between cess and surcharge is cess is for a specific purpose, like education cess. Surcharge, that specific purpose is not mentioned. So if you levy a cess for a specific purpose, it has to be used for that purpose. And in case of surcharge, it can be used for any public purpose. So these taxes which are not falling, the taxes which are not falling in these areas are to be divided on the basis of recommendation of Finance Commission. Finance Commission is constituted after every 5 years, and it deals with 4 important areas. Area number 1 is to decide on the distribution or distribution, division. In fact, division should be mentioned first, and then comes the division between union and states, and distribution between the states of the taxes which are to be shared under this Article 270, and the taxes which may be shared under Article 270. So that recommendation is given by Finance Commission. Then there is another very important area which is covered by Article 275, which is grant in aid of revenue. Government of India can give grant in aid from the consolidated fund. This grant in aid is in addition to this distribution which is happening under Article 270 based on the recommendation of Finance Commission under 280. Article 275 deals with grant in aid, and it is given to the states which are in need for this specific purpose based on law made by the Parliament. This will be charged expenditure on the Consolidated Fund of India. Grant in aid of revenue is also given to the states for raising the level of administration of the scheduled areas and also for the welfare of the scheduled tribes. So the grant in aid, when it is given, what principles will be followed? The principles which are to be followed is determined by principles for grant in aid are also laid down by the Finance Commission under Article 280. The other 2 areas are, one is the resources, augmenting the consolidated fund of the state for supplementing resources of panchayat or the municipality. So for the panchayat and municipality, the resources which are to be supplemented, for which you need augmentation of the resources. First of all, you have to augment the resources of the consolidated fund of the state. Then from there it will go to the panchayats and municipalities. So that aspect is also addressed by the Finance Commission. So these are the broad areas of the distribution of the taxing powers, the provision for the grant in aid, the provision for the division and distribution of taxes. There is another very interesting provision in the article in the Constitution, which is Article 282, whereby both the state government and the union government, they have power to give to make expenditure for any public purpose, even if that is not part of the subjects which are assigned to the states or to the union. Like the state subjects, say fisheries, Government of India gives a lot of aid to the states for development of fisheries, and for that matter agriculture, many subjects which are there in the state list. not the taxation subjects. I'm saying that subjects which fall within the state list. So on that subject also Government of India can give funds, and that is permitted under Article 282. Same thing is permitted in case of states. They can make expenditure for any purpose even if it is not mentioned in their list. That is Article 282. So this is the broad division. Uh, there are certain articles which I will cover separately because then it otherwise becomes very lengthy. There are certain restrictions on the taxation powers of the states. There is also one restriction on the taxation power of the union that I will separately cover.